How's it going? It is December 14th at 6 a.m., half an hour before the market's going to open. Yesterday, we had a really strong market after FOMC out of resistance levels. We started to head towards all-time highs in the SPY, and we'll just see if that momentum is carrying forward this morning in the futures. So let's go ahead and take a look at that. Well, it looks like the S&P is moving up definitely as we open up. It is starting to move higher. Let's see what futures look like. Significant. We are significant in S&P, NASDAQ, and Dow. All of them roughly 50, almost half. Just a snag a tiny little bit below half a percentage point on all three of these. So definitely significantly up. Now, don't be surprised. Remember that we have a tendency to head towards the previous close. So since we're up pretty significantly, don't be surprised if we head downwards towards yesterday's open, but that doesn't necessarily mean that we're going to close lower than yesterday. It's just that we have an upward bias. We may trade lower at the beginning, and then we'll see from there. If we take a look at our S&P 500, you can see that we're approaching this first resistance point. It looks like pre-market will be above it, and then it's the all-time high up here. So yesterday we talked about how this is way high. We went parabolic. It's above the Keltner channel, the 3 ATR Keltner channel, and how generally we can't sustain that for very long. However, I don't think the pullback is going to be imminent. Yesterday, I mentioned that it could be today, and it still could be today. But if we think about what's happening in the market, and from an institutional perspective, there is probably a good number of institutional traders who were betting on a pullback. And they probably started over here when we started talking about it. And then they've been betting on a pullback all the way up into here. And now that we've gone parabolic, it's going to be a little bit painful for any of those traders or fund managers who held on to their shorts. So anyone by now with this huge move upwards, there's two things that have to happen for these particular traders or fund managers. First of all, they've probably got to cover their shorts. they've lost a little bit too much money right here at this point, so they need to cover their shorts. The second thing they need to do is if they got hurt by that, or they've been underperforming the S&P throughout the year, or they're not close enough to the S&P in performance throughout the year, now they've got to play catch up. So they've only have 2 weeks left in the year, and they've got to play catch up. So that those two things combined will allow the markets to continue to rise for a little bit longer. How much longer? Hard to say. It just depends on how much money is caught off guard like that. So for us, we've been talking about it, and we say in our viewpoint that this can't sustain, it's got to pull back or at least consolidate, and it consolidated instead of pulling back, even though we had the higher probability of it pulling back. It just consolidated and it went up again. Now it's parabolic. Once again, we're of the opinion that there needs to be a strong correction, a strong pullback before the market can move higher. However, we haven't been positioning ourselves as if the market's going down. We've been positioning ourselves in the direction of the trend, which is up, but maybe less and less upward. So if I was really long before, then I became a little less long, and then I get now in this particular situation, I'm going to get even less long, but that doesn't mean that I'm going short, and it doesn't mean that I'm going completely flat, like zero delta. I'm still positively biased because this is still an uptrend, and until this market actually pulls back, I'm going to maintain that slightly positive bias because that's what the market is telling me. So the actual current situation, we have to discern between the current situation and what we believe is going to happen in the future. And we trade our current situation, but we prepare for the higher probability event in the future. So what that means for us is we maintain slightly positive portfolio. This is why we focus on portfolios and not single trades, because if we did single trades, it'd be very difficult to do this. Either you're long or you're short. There's no really neutral ground. So the way that we're doing this is either we are allocating less capital at risk in the positive direction, or we're hedging, or we're setting trailing stop losses on all of our positions, especially the ones that have good profits already. And any new positions that we take, we're going to take a shorter time frame view, or we're going to hedge them carefully. We're going to make sure that it can't hurt our portfolio too much if we reverse. But for now, this is a positive trend and it is going up. And if we just say, hey, it's going to pull back and just loading up shorts, we're going to end up hurting our portfolio if things like hedge fund managers need to cover their shorts. They need to try to catch up with the market at this point. So if we look right here, this particular correction was so far, or upward trend is about 15%. And if we look at the performance for the year, 2023, all the way up to here. So far, we're up 24%. So that's quite a bit. And any fund manager that hasn't performed at 24%, they're going to be, or at least say 20%, then they're going to be nervous at this particular point in time, especially if they were betting on a pullback to help them catch up to the S&P, and we just went the exact opposite direction. So there is probably going to be some money chasing this over the next couple of days, and then we have to be very, very cautious. Like I said, we still point ourselves to the upside, but we're very cautious in that money allocation. If that's not clear, or if that's confusing, just let me know. Shoot me a telegram or an email or something, and I'll be happy to go over it in more detail. But just know that this is probably, so it looks like we're up opening a little bit higher, and we could, excuse me, we could possibly approach the highs before the end of the year, and then we'll see when that pullback actually starts. Now, if this market seems to be anticipating that the Fed is going to keep on, or not keep on, begin lowering rates. And if that happens, that is an artificial force on the market. It is not natural market forces. It's an outside entity exerting power and force on the market. And so that will delay or temporarily move what the natural rhythm and the natural tendency of the market is. So if we do get that happening, then we could actually, so we said this is unnatural and it cannot sustain itself for too long. However, if you have an unnatural force coming in to keep on pushing it in that direction, then it can sustain it for a little while. So if we get up here and there's an associated outside force like the FOMC or the Fed lowering rates, then that could push it even higher to even more unnatural place. So those are things that we can't entirely predict because we don't know exactly what the FOMC is going to do and when they're going to do it. So there is still a possibility that even though we see this unnatural position for the market to be in, that it could stay there for a little bit, especially if there's outside forces. So that's another reason why we don't want to position ourselves in a way where we think that this is going to go short. Okay, let's take a look at our Fed Watch tool. I want to see how things changed. So We have a 16.5% chance now that we're going to lower rates in, oh, that's interesting. Oh, no, yeah, lower rates by a quarter basis points. So after yesterday's FOMC announcement, it went up by about 6 percentage points. And then let's take a look at March. Oh, it's crazy. So we went from 50 or 30 1 month ago, a 34% chance of them lowering just a quarter basis point to 55 a week ago to 65 yesterday and now 70 today. So actually, when we looked at this number before the FOMC meeting yesterday, that was around 55% as well. So it moved up 10% just during the day, and now we're up another 5%. So this market is really counting on the Fed lowering rates soon, as soon as March. We'll see if that really happens. Based on everything I heard Powell say, he would say, well, we still might tighten, or we still might hike. We still might hike. Don't, just because our expectation is that rates might lower doesn't mean that that's our plan. That doesn't mean that's what we're actually going to do. He kept saying things like that, but this market is just really exuberant. And other people, I read some articles where they were summarizing what Powell said, and they said, oh, the Fed indicated that that they're going to be lowering rates. That's not really what I heard, but we'll see, But that's what's being priced into the market right now, and we can see that in TLT. In the bonds, we're going to open higher. It looks like maybe even above that MA200. We'll see if that holds. So I'd be a lot more interested that we close above the MA200. And then, of course, we get 1 or 2 days where the low is above the MA200. That would be interesting to me in TLT. Otherwise, this could hold as resistance and it could pull back. We'll just have to wait and see. The other thing that we want to be aware of is with the S&P so high, what we want to start seeing is if we're going to have a sustained move upwards, we want the natural rhythm of the market to come back into play. And the natural rhythm would be the small cap stocks and growth stocks leading the way. We do have QQQ leading, but so far we've seen the small caps not really. Looks like we're starting to catch up. That's good. And then if we look at the even more risky ones, we still haven't gotten above this purple line. I drew this, I can't even remember when I drew this, at least a year ago, I would think, probably sometime around here. But in any case, this purple line, we still haven't gone across, and we definitely need to cross it. Otherwise, this just looks like a giant chop, sideways chop. So if we pull down from here, then the small caps are not participating. If we cross above it, then the small caps are starting to participate, and then we need to see them start leading the S&P 500 rather than lagging the S&P 500. So if that's the case, if we see breakout above this purple line, I'm going to start paying really close attention to small cap stocks, because if they have to catch up to the S&P, and the S&P is already up 24%, then that means small caps have a lot of room to grow to catch up, and then even further to get ahead of the S&P 500. So that would be a lot of really excellent opportunities in small cap stocks. And small cap stocks, when they move. In a year, they can go up 6, 7, 800% unleveraged just on the equity. So if we're doing options on top of that, and you're 4 to 10 or 20xing that, that's a huge amount of growth all of a sudden. So we're going to be watching for that crossover to happen. And if it does, we're going to start paying really, really, really close attention to these small cap stocks. So let's take a look at some levels for those of you who day trade. And since we removed all our lines, since we broke above all those lines, we've got to put in new ones. So this resistance that we crossed, or looks like we're going to cross, is at 471.3. So let's add that in. We call this previous resistance. Then we're going to put one at the all-time high, which was at 479.93. I'll put it in as that, but remember it's a region. It could be 490 or 480, or it could be 5 or 10 cents below or above that. But let's just put in that precise 479.93. And I'll call that all-time high. Let's see how far. Yeah, that's still a little bit of a distance. So we're unlikely to approach that today. And then we'll get in our lines that we've traded in the pre and post markets. And then we'll add in some lines that were significant yesterday. We are unlikely to approach these lower ones, but we will probably, likely, about 70% chance, trade down towards the close, which was at this purple line. But we could get stopped at this purple line. We could get stopped at the previous resistance. We could get stopped somewhere in between because these are regions, not exact lines, before we start heading higher. Or we could say, oh my gosh, we need a breather after this huge run that we've made over the last week, all green bars over the last week, and heading higher. So either way, it is definitely possible. And then of course, if there's still exuberance and we get that effect that I was talking about, where fund managers and traders, institutional fund managers and traders, need to start playing catch up or need to cover their shorts, then this could start heading higher. And we don't have any reference for that. We'll just have to see as the day develops what levels they might react to. That is hopefully a good preparation for your day. Remember that this market is still bullish, and we are in that we did break out of this downward trend or this pullback that we had at the beginning or the middle of the year, and now we're on the uptrend. This is a higher high, right? A higher high. So for sure, and we haven't really had a low. We haven't even pulled back yet. So we want to be leaning towards the upside, to the bullish side, but we just want to be very cautious when putting on new positions. Existing positions that are already long, they're fine, right? They're probably very profitable depending on where you put them. Even if you put it on 2 days ago, they're probably very profitable. So we just want to protect those profits and make sure you're either hedging those or putting trailing stop losses. So that'll be a job for you to do today if you haven't done it already, because Friday is quadruple witching. There's going to be a lot of volatility. And volatility means what? It means that the implied volatility portion, the vega inside of your options, is higher, which means higher priced options. It's going to be more expensive for you to do the exact same action on Friday than it is for you to do it today. So you want to make sure that you get that done today rather than waiting till tomorrow. Okay, so that's it for now. We'll see how the day develops, and then I will see you in the aftermarket.